Hello folks, it's Mentor speaking. The 53rd episode of the Luganda series, a Jakolanga introduction to something new that we're going to be using. Okay, I'm going to introduce something new to every other trader following me here on YouTube. So now right here, we have an entry, take profit 1, take profit 2, take profit 3. Then a stop loss, we are risking 36 pips. Then our target is 121 pips or more. So right here, chenjagala tukole chiri chomo, we're going to use all the concepts that we've learned from episode 1 to the 52nd episode. Those are the strategies. Okay, if you've not watched all those videos, then you'll have to go back, because it's really important for you as a trader to, okay, as someone following me, learning from me, to have all the knowledge. That's why I record all these videos in episodes. So that aside, let me go ahead and delete this whole thing here and show you what we are going to do. So I'll go ahead and click delete, everything disappears. So right here, we are going to start with the weekly bias. Okay, tujatandika weekly bias first. To get this area here, tujakosa weekly bias. Okay, right here, this consolidation. If we have a weekly low on a Tuesday, we have the likelihood of having a weekly high on Thursday. Then the other retracement or the distribution of, this long move here, done either on Thursday or Friday, but the weekly high Thursday, weekly low maybe on a Tuesday. So let's go ahead and look at the calendar. So on Monday was 9th May 2022. May 9th 2022 was a Monday. May 9th was a Monday. Right here, this is a Monday. So Monday, Tuesday. So this was Tuesday. Yakolanga weekly high on the USD card. But on Thursday, we ran above that. Okay, on Thursday, we ran above that. Let me look at Thursday. Thursday is right here. Let me go ahead and share my calendar with you, my other screen with you. Now, these videos are going to be long. Tizijabiranga the other videos, because it's a lot that we're going to be talking about. So, Monday, let me go ahead and look at the calendar here. So, we have Monday here, May 8th. Yeah, let's go ahead and mark Monday, May 8th, right there. Okay, I just want us to see. Okay, Monday. Then Tuesday, May 9th. Okay, so let me mark from this low to that high. Okay, I will mark from this low to that high. Okulaga the weekly bias. Okay, so Monday midnight. Monday midnight is there. Then Thursday midnight or Friday midnight, because I want to show you, okay, that we had the weekly high on a Thursday right there. So I'm going to be looking at price range between Monday midnight and Thursday midnight. I'm not leaving Friday out. Okay, I'm not leaving Friday out yet, but I want to look at this range here. Okay, so where is Tuesday? Tuesday was May 10th. We didn't have the weekly low on a Tuesday. Rather, we had the weekly high on a Tuesday here. Sawa meke sawa musanvu emisana right here. So let me go ahead and mark the bias, because it's very important for you as a trader to mark 30, 45 there, Monday. Then this will be Wednesdays midnight there. Then on Thursday, sorry, right around there. Okay, so we have Monday, Tuesday, Wednesday, and Thursday here. Above Tuesday's high, if I see price trading, above Tuesday's high, okay, on a Thursday or any other day. Why? Because we're all expecting price to sell, but because of the inflation on Wednesday, it changed the script, okay? Everything got disorganized on that day, okay? The weekly bias had to be disorganized on Thursday, okay? There had to be changes. Just nga bw'obeera no planning ekintu, but no tukekisena no tusamuko mu plan. So Wednesday here, if you watched price kick few, folks out of the market, this is what happened here. We didn't want to see this, okay? Weekly bias. So every time we have news, just know the weekly bias will have to not to go according to our plan. So that's why I've decided to start with such pairs as in this thing here, okay? Most especially the major pairs. So Tuesday's high. Now, if we run above Tuesday's high, as usual, if we run above a daily high or below a daily low, above this high, I will look for an institutional level or the next institutional level. The next institutional level about that price level. Let me see what price level is that. Coordinates, it is a 660 level. So I'm going to look at the 80 level. 800. So here we have 80 up and 80 down. Just a second. That's there. So here, the first concept, we use the weekly bias, okay? Then the second concept, we are applying the institutional levels. Okay, we are applying the institutional levels. Now, this is a Thursday here. Remember, just like I've told you, if we run above any high, either yesterday's high, yesterday's low, and we actually know that, well, on such a day, we shall see price trade lower. Which levels am I looking at? I am looking at institutional levels above this high or institutional levels below this low. Or maybe this low, or maybe this other low. If this is Monday's low and price trades below this low, I will look for an institutional level below this low. If price trades above this high on a Wednesday, I will look at the next institutional level after this high, okay, or above this high. The same thing keeps happening, okay? I've talked to you so many times to look for weekly highs on Thursdays to see price drop like this. Now, the other time we looked at something like 500 pips on the euro dollar, but most folks didn't mind doing this analysis, which is okay. Now, that aside, I said we're going to look at this on Friday, okay? I'm keeping this for Friday. That's why I haven't marked Friday. So on Thursday, if you know this analysis, that, okay, if we run above a high, I'm going to look at, the bias, okay? I'm going to look at something above, okay, the next institutional level. Now, this is the funny thing here. You will not get, okay, you will not get price hit this level here. Why? Because it depends on the broker you're using. Just like I've told you, it depends on the broker you're using. Some brokers will manipulate these wicks. Some other brokers won't do what? Won't manipulate the wicks. So this is a little secret. If you want to know your entries, if you want to know the best way possible to enter, because if price is not hitting this level. Now, most folks out there using buy limits and stop limits and sell limits, you know, if you want price to trigger itself here, you will miss this strong move here and regret why you didn't sell that level. Now, this series or this episode and the next episodes, the coming episodes, are going to help you know exactly how to enter in the market, where to put your stop loss, and where to put your take profit. Now, this is the first episode, okay, this series. So now, what would I advise you to do? Now, do you remember the Fibonacci that I told you in the group to look at and you analyze very well? Yes, probably you remember. Now, this is what I want you to do. You see this low and this high. This low and this high, that's your target. You remember the Fibonacci, the 0 levels and the 100 and the 100 levels. Now, something really funny to do here. Okay, remember I told you we are going to be using the Fibonacci tool. 0, 100, or 100, 0. So look for your Fibonacci above this high that week and the next institutional level. That's your 0 and 100. 0, 100. Okay, there. You see that? I'm teaching you how I trade, folks. I'm teaching you how I trade. So, this is what happens. You remember these levels here? 23, 50, the equilibrium, then the 61, 78, and the 100 levels. Now, these are not harmonic Gartley patterns. These are not any other chart patterns, but these are smart entries. How do you enter the market? Or how are these people doing it? Okay, smart money concepts. Those are the concepts I'm teaching on this YouTube channel. Where is your entry? Your entry will be right here on the 23% retracement level. Why? Because I'm not sure if price will come back here. I'm not sure if price will come to this level. Okay, so now let me share something with you. I took this trade and I gave it to the signals group. On my live account, I am still here. I'm still selling. I'm still in the market, folks. On my live account, I'm still in the market. Now, let me show you a recording where I sold around that area. I was recording this on Zoom. Let me just show you that recording. It was signals group, that video. Okay, it wasn't converted. I think it's this one. Okay, so let me see. Okay, that very video. Okay, right there, the USD card. I sold on that level. I sold there. I had a Zoom, lesson with the other people in my mentorship, in the Signals mentorship group. This is video that I recorded. I think you can see it's a Zoom recording right here. So I even gave them that signal. I gave them that signal this day. When price hit that level, I sold. Okay, let's look at the price level. Back to this business. So when I sold there, I'm still in the market. It was a Thursday. I'm sure Sharif and your group, you didn't take this signal serious. But if I show you here, 181 pips, close to 200 pips. Okay, now they missed this strong move here. Okay, so this is what they missed, because I know most of them were out when they saw it retracing Wagulu, never closing a trade. But that's what it takes when you learn. So back to the main screen here. What is your entry? Your entry, if price is selling, your entry will be the 23 level, retracement level. Now this is what I would advise you to do. Come to the Fibonacci settings, hide the other useless levels like the 6180. We're going to hide it. We only remain with the 23 level and the 78 level and the 50. Okay, because we're going to need it in the future. So we're going to hide the 61 level right there. Oh, sorry, not that one, 61. So we're going to get rid of that level. I'm only left with two optimal entries, 78 and 23. And I will show you why. I'm taking what level? Here and here. Okay, between these two lines here, between Tuesday's high and the next institutional level above Tuesday's high, I will have my fib placed there. Because I'm expecting price to go lower, okay? Because I'm expecting to see price trade lower. So this is what I will do. The 0 level will be down here. Sorry, the 100 level will be here and the 0 level on top. So that's why Ntandikira Wansi from there to that institutional level. Boom. My entry, 23% retracement level. Right there. My stop, the next institutional level, which I normally use, and you know I'm risking 20 pips for that concept. Okay, so we go ahead and go ahead and get to the next institutional level, which is the 100. Sorry, the 0 level. How many pips am I risking? Well, those are 20 pips. Those are 20 pips. There and there. Okay, I'm risking 20 pips. This is my entry. Stop loss. Take profit. Well, since it's a Thursday, I'm looking at something like 200 pips. Okay, something like 200 pips. Back to Friday. Okay, we've seen what I look for on a Thursday and both Tuesdays and Fridays. Okay, sorry, both Tuesdays and Thursdays. This is how I will trade this setup. Now I will guide you more. Okay, I'll give you more guidance on this. Don't really mind much about all this kind of stuff. I will guide you. So let's come back here where I had the first take profit and the second take profit. Now we are done with the weekly bias and the institutional levels. Now we are back with the New York session. Okay, between midnight and 11 o'clock in the morning New York time. Now, if I am sure, or if I'm convinced enough that price is trading lower, okay, because just like I've always told you, there is no strategy that is 100% right, okay, just 85%. All the strategies I'm giving to you, they are all smart money concepts, and they are 85% correct. Not 100%, but 85% correct. So the same thing is going to happen here, okay? The same thing that we did the other side, it's actually the same thing that we're going to do here. So before midnight, New York time, if we are selling, okay, if we are really selling at exactly 8 o'clock in the morning, or 8:30 o'clock in the morning, what am I looking for? Well, I am looking for an entry, the smart trading entry, the smart way to enter the market, in short. See this low, 1 o'clock. This low, 2 midnight, New York time. So I want to take this low, I would rather take this low. So I will mark that low, just like I marked the previous stuff. I mark that low there. See these highs? Around these highs, I'm going to look for an institutional level. I'm not going to mark this high. I'm not going to mark this high. I am looking for an institutional level. Because, let me tell you why I'm doing this. Because price is dropping, okay? And those brokers, some of them will manipulate price these weeks. So that's why I'm not giving you this highest week. And I will show you why. So, what time of the day? Let's go ahead and mark the New York midnight. Okay, right there, right there. That is midnight New York time. Okay, now it's not a week. I just want to extend it there for you to see that this is midnight. This is this low that came in past midnight. What am I looking at above or around these highs here? An institutional level. Yeah, most of you guessed it right. Now, what level is around there? The 20 level. See that line? I hate, long stuff. Let me just start from here to there maybe. Then I delete. I love having a smart work. See this level here? That's what I'm marking. See this low? That's what I'm also marking, okay? You remember the Fibonacci? Yes. From here to there. This time, okay, just like I told you in the 51st episode, 52nd, sorry, we are not going to look at, the other stuff, order blocks and whatever it is, because I know most folks out there have problems finding order blocks. And in most scenarios, you won't get an order block, okay? You won't find an order block anywhere. Or maybe an imbalance, just in case you're stuck. You don't know, what is my entry? How should I enter the market? So, simply because I know that price is dropping, or some folks already know my entry. Yes, the 23 retracement level, that is my entry. Now, this is what we need to do. So you are ahead of price, okay? You are ahead of the market. Midnight, you mark. This one comes in at 3 o'clock in the morning, you also mark. Now, before you blow up your accounts, or before you do something wrong and you start blaming my concepts that Tezicola, I told you if you're to trade, you wait for at least 8:30 o'clock in the morning. If you're trading the dollar, you wait for what time? 8:30 o'clock in the morning. Why am I telling you this? Now, most folks out there, they have the habit of entering the trade, or you see trade lower. As it retraces back high, do you know what they do? They close the trade. Okay? they close the trade. Now, if you don't have the patience of entering here on the 23 retracement level, then price trades above the 23 retracement level, and you start getting emotional and you close your trade here and see what you miss, you'd rather wait for 8 o'clock in the morning, or maybe 8 o'clock in the morning, New York time itself, for your entries. Now, I'm showing you where to enter your trades. The 23 retracement level. That will be my smart trading entry. The smart trading entry will be right there. Boom. What time? 8 o'clock in the morning, this very candle. Now you can enter here at any time past 8 or any minutes past 8, it's okay. Or as long as we see price trade lower and maybe comes back to that level, if you're patient enough to hold price, you can enter right there. You sell. Okay, you sell there. Now, where do you put your stop loss? You've already guessed. The next institutional level above these highs, okay, which is the 50 level. Okay, which is the 50 level. In this case, it's a 50 level. So where is it? Now, the 50 level will actually, these are so many pips that most folks out there wouldn't want to risk. 35 pips, 36, close to 50 pips. Okay, where is it? Take profit. Okay, let's leave the stop loss there. Then let me show you your take profit. Now, this is what I want you to do. Before we go to the stop loss and the other stuff, okay, let's leave the stop loss alone. Now, do you see this whole thing here? This whole move here? Where are you going to put your stop loss? Your take profit 1, take profit 2, and take profit 3. Now, I'm doing this video for those people that have 100 trades running on one currency pair. Those rich traders, okay? Not profitable traders, but I'm doing this for the rich traders. If you take time and preview the pictures sent in, the Telegram group, you're going to see that we have a lot of rich traders in that group. I'm sorry to say so, but that's the truth. So first things first. So where am I putting my first take profit? Well, I'm going to look for institutional levels first. I want to show you my concept here, why price came to this level, why from here to here, the whole of this Fibonacci thing here, and what the other people would be doing, okay? So let me first go ahead and show you something small here. So first, take profit, an institutional level below this. That's what I'm looking at as my first take profit. How many pips? Well, maybe I'm looking for 20 pips. Maybe I'm looking for 50 pips. Maybe I'm looking for whichever, okay? Now, it's not a must that price will always cover this thing here, okay? It's not a must that price will always come here. I want to show you this, my concept here, then I later show you how the other person trading a week to week would miss the third take profit. Okay, an institutional level below this will be my first take profit. And how do I find that? Well, I just put my line there, double click, look for the next institutional level, which is the 80 level, okay? No, it's the 50 because I'm looking at something below the 80. So that will be the 50 level right there. This is my first take profit. And I think you see what happens. Price comes to the 50 level, retraces, tries to, trade higher, and again it gives the other people trading, you know, the 50 level an opportunity to sell. So that's my first take profit. Then my second take profit will be in the next institutional level below this, okay, below this level, which is where it's going to be the 0 level right there. Now about the third take profit, you put your first take profit below this, okay, that's the take TP1, okay, which is the 80 level. You're only looking for institutional levels below those lines. Take profit 1, take profit 2, take profit 3, okay. So if I go ahead and delete this fib, or if I measure from the entry to the third take profit, you're going to see how these things work. So that is the entry to that level, so 113 pips, but I would highly advise you to take 100 pips. So let's delete the Fibonacci. You see, so this is incredible. This is a bit nice, okay. Now this is how I advise you to trade. Now let me show you the other way. If you're using, you know, a week-to-week concept, if you're trading the Fibonacci using a week-to-week, how you'd miss the third take profit. So let me go ahead and delete everything here, or let me just have another tab, the USD JPY, USD card rather. Okay, I don't know why it's loading the US Euro. Okay, USD card. Excuse me. USD card. I don't want to delete this because I will need it after this. So, excuse me. So if you're marking a week to week with the Fibonacci tool, very simple, week to week. Okay, so if you're looking for institutional levels, below here, where would you put your third take profit? Well, your third take profit will be below, and the next institutional level below this, which is the 80. No, that is the 50 level. After below the 80 level, it's the 50 level. Okay, so 50 level, which priced in trade 2. Okay, so if you're to use my concepts, please do. If you're to use some other person's concepts, then you're also welcome. They're also concepts, and I'm sure they work far better than mine. So let me show you. Yes, they work, because I'm not saying that I have the best concepts, but at least I know they work for me. So if you took the next institutional level below that, this will be your first take profit, you're good to go. Then another institutional level below that, which should be the 50 level, 50 level, you're also good. But the third take profit would be totally difficult for you to get because you didn't use the Fibonacci tool the right way. So I hope this was insightful.